Hey traders, Todd Gordon here of tradinganalysis.com. Welcome to my home trading office here in New Jersey, trading analysis headquarters. I want to do some live trading for you right now. We're going to set up a couple option strategies in TLT. We see the bond market moving into a fourth wave consolidation with high implied volatility. It's a good time to jump into some short premium strategies. So let's go. Okay guys, so here is the US 30-year bond futures. On the right scale, left scale, we have the ETF for bonds, TLT, which is a mix between 10s and 30s. So it's not a perfect fit, but it's close enough. So here's what we're looking at. In the bond market, we have a ongoing wave 5 Elliott rally. So we have wave 1 up, wave 2 down, and now we're looking at wave 3 rally, which you'd expect to break into a 5-wave subdivision, which we have 1, 2, 3, 4, 5, perfect. Now we're looking at wave 4. This is the time where we want to be short premium, right after a third wave ends, okay? So fourth wave is now unfolding, and we have a couple price and time projections to figure out how far wave 4 is going to last, which would then give us our strike and expirations for the strategy. So we're going to do a couple different studies. First thing we're going to do is the time analysis of wave 2 compared to wave 4. I've already done it for you. 4v2 is right here, okay? So a 6-1-8 relationship basically is, let me just say, if wave 2 lasted 100 days, 61 days would be October 7th. Equality would be October 25th. And more often, wave 4 is 1.618 times the time elapsed in wave 2 compared to wave 4. So we have a little time zone there. And we've also done a 4v2 price projection, okay, 4v2. So distance traveled in wave 2 compared to distance traveled in wave 4. Again, we have the 618, we have equality, and we have 1618. All right, so that's part 1. Part 2 is let's do a 4v3 price and time comparison. So we're going to do a retracement of wave 3 and ongoing wave 4. There's your 4v3 price. And then we're going to do the exact same thing, 4v3 time. And what you're looking for here, guys, is the intersection of price and time to figure out what's the most likely stopping point or termination point for wave 4. Now, the blue levels, as we discussed in yesterday's video, are your minimum levels, okay? The green are your ideal, and the orange are your kind of outer boundaries, all right? Same thing goes for price and time. So down here we have the lower level, kind of the earliest that wave 4 should complete around October 7th, going out to the ideal November 23rd. So what we've done here, guys, is we have come up with a price and time zone. And what I'm going to do is kind of draw a box around it. So we have the upper part of time right around here, or sorry, price. So there's the upper price down to the lower price. And then I'm looking at also the outer time, which would be this outer fib level right here, kind of the nearest fib level in terms of time. So that's the 2 points of the box here. We have lower fib price right there, and we have upper fib price. Okay, so all together, guys, we have an ideal price and time zone. Okay, all in this shaded area, which is pretty horrible. I'm a terrible artist. But most likely it's going to be these green levels right in the middle. Okay, so we'll just take that away. And what we're going to do now is set up a short premium strategy. And I want to trade this live for you. Reason being is if you look at TLT, it's in a high implied volatility environment. All right, the option statistics gives it a 52% IV percentile rank, which means it's in the top half of its range for volatility. So that means that not only are we in a highly volatile period for the bond market because we just came through a wave 3 rally, it's also about to start to compress. Volatility is going to contract a little bit as we move into the wave 4, targeting our ideal price zone of about 134, which is about 112 in TLT, as well as outer time boundaries, which are like October 26th, November 12th, and November 20th. Okay, so what we're looking to do is put on a iron condor which would take advantage of the fourth wave zone. And again, wave 4, okay, should definitely not go above the wave 3 high, and it should stay above the lower price support level. So we have a pretty big range in here, all right? So what I've done is calculated the standard deviations for you, all right? And the standard deviations are not as scary as they sound. In fact, they're very easy to calculate. Over here on the TLT option chain, we're looking at plus and minus $12.34, or sorry, percent, 12.34%, which is $4.35 above and below current price to give you plus and minus 1 standard deviations. All right, and what you're doing by trading at those plus and minus 1 standard deviations is really stacking the odds in your favor. Okay, perfect. So here are the new standard deviations. So plus 1 standard deviation is 120.65, which is just above the wave 3 top here. The minus 1 standard deviation is 111.91, which looking over at the TLT chart is just below the 112. So I really like that, okay? The 111.91 minus 1 standard deviation is just above your pair of green ideal wave 4 fib supports, and the plus 1 standard deviation is just above the upper end of wave 3. And in fact, we could shade that a little bit and go a little inside of that. All right, so I have it loaded up here on Doe. I have the noves set up. We have 13 minutes until the close. I'm going to push down to the 120s and go 120, 121 on the top side. Plus 1 is 120. I mean, we can even get down to like 119s. But I want to, sometimes we can get a B wave that goes just above the high here. So I want to give that a little bit of room. So we'll do 120, 121, and then we'll do the 111, 110 put spread. Okay, and we have a 61% chance that this trade is going to work. All right, so that is absolutely fine. And now I'm going to just do this over in Thinkorswim. It's a little easier. So let's do all strikes. I'm going to sell Iron Condor. I'm going to do the 1. Okay, 1. Sell the 1. Actually, we'll do the 1. What I say? 111, 110. That's good. And then we're going to sell the 120s. Buy the 121s. Okay, so we're going to sell the 111, 110 put spread. We're going to sell the 120, 121 call spread. Mid price is 30. Let's see. Let's do 20. Confirm and send. Let's see if we can get filled. Max profit 600. Max loss 1400. That's fine. Confirm and send, and let's see if we can get it. It might take a little while to fill, but we'll leave that there. So that's going to be the trade. I'll get this video out to you guys pretty quickly. And keep in mind, we do have a webinar coming up next week. We're going to do an options webinar, so just go right here to free webinar and can sign up. I'll link you over to the video and put in your first name, your last name, and we're going to go over everything I just went through and a lot more. It will be recorded, will be archived, so put in your first name, your last name, your email, and we can see you on Tuesday. So let's just go back and see. Let's see if I can go 1 cent below the mid price. Confirm and send. Let's see if I can get them at 29 cents. Canceled, and there we go. Sold them. Okay, I'm going to get this trade out, guys. Hope that helps. That's a pretty detailed trade, pretty advanced trade. There's a lot at work there, but we'll cover it on Tuesday. So I'll see you guys in the webinar, all right? Take care.